Good afternoon, everybody. Welcome to the March 19th audit committee meeting. We have several things on the agenda, but the first thing that we have is to approval of the meeting minutes of November 7th, 2024. Can I have a motion on that? Okay, Janet. I'll second it. All in favor? Aye. Okay, so then we'll turn it over to auditors for the audit draft.
Good afternoon.
Margaret's on.
Good afternoon, everybody. Start with this presentation that I handed out, just to go over some highlights. The first page, I just do a change in unrestricted working capital, which is our cash receivables and payables. Just shows a favorable increase of $700,000. Operating revenues comparing 2024 to 2023. You can see operating revenues increased by $9.2 million. Part of that is an increase in airfield revenues due to the increase in the landing fee from the airline rates and charges settlement. Terminal rentals, same thing, increased to a higher terminal rental. Ground transportation increases. The $800,000 concession. Expenses on the next page. Those operating expenses increased by $6 million. Personnel services was an increase of $2.2 million due to higher salaries and overtime. Purchase services increased due mainly to the cost of the curbside security services contract. Page shows.
One question.
Oh yeah, sure.
That's $6 million variance, that one. We already used a lot.
So yeah, we're looking at curbing that whole 2026 budget. Bringing that down. We've already cut some of the expenses for the curbside security. We toned that down a little bit.
Purchase services to qualify.
Brings the results of the operating revenues less the expenses down to the next line, the results report depreciation, shows depreciation. Some of the non-operating items such as passenger facility charges, grants, improvement charges, interest income. It's $1,000 increase in interest income or full year capture of the interest rates with our new banking provider. Insurance recoveries and an interest expense on the bonds. So we have a net increase in net positions for 2024 of $35 million compared to $18 million. The majority of that is due to the capital contributions due to terminal. Just a few highlights on the next page. What I'm just saying, the net position increased $16.2 million. We reduced our bonds outstanding by $7.3 million, bringing that down to $48 million. Our debt service coverage ratio, master bond resolution states we need to have 1.25. We have a good coverage of 2.2, which is net revenues to net debt service. Net assets after depreciation increased by 22. I want to touch on the airline rates and charges. It's one of these reports. It's just since I have these bullet points on this handout. The airline rates and charges does not quite follow the GAAP financials in the annual comprehensive financial report. It's a little bit modified to be more of it on the cash basis where we charge them the principal on the debt, whereas in the financials we only charge the interest. A few other adjustments like the OPEB and the pension, we don't charge them for the GASB entries on that. We actually charge the airlines the amounts that we pay for the pension and the OPEB. So when we get all done with the rates and charges settlement, which is this model calculation, pretty much the bottom line net revenues to share between the airport and the signatory airlines was $7.1 million, which is pretty much revenues minus expenses minus the debt. Minus there's like a 400,000 or 400 million capital expenditures that we pocket at the end of the year. So we split that 50% $3.5 million is credited to the airlines, 3.5 to the airport development fund, less the airline incentives, which we pay out of our own. We don't have the airlines pay. And the settlement of the rates, which is the landing fee and the terminal rates, where we go back to the different cost centers, charge the rates based on the expenses of the cost centers, resulted in $2.3 million in credits back to the airlines. Majority of that is to lower landing expenses of higher landed fees. Total credits to the airlines this year with the revenue sharing and their settlement of the rates is $5.9 million, which is credits that will issue to the airlines next month. So that's the highlights of the comprehensive financial report. And the
So the binder that you all have, there's very little in that actually is ours as your auditors, but there's some. So if you go to page 15, that is where our independent auditors report is. So this starts with what our opinion is, which our opinion is that the accompanying financial statements present fairly in all material respects. The business type activities and fiduciary funds of the authority as of December 31, 2024 and 2023, and then you comply with GAAP as you're required to. It does go on to explain how we come up with our basis for opinions, what the responsibilities of management are. The next page goes over what our responsibilities are. Our objectives are to obtain a reason stated correctly in a statement. We are not required to give absolute assurance. We would never believe it. So, and this does go on to explain some other items that we do in performing our audit. Talks about the required supplementary information, which is OPEB, relates to the MD&A, things like that are all within that required supplementary information paragraph. Supplementary on page 17, that is really the biggest piece in that is going to be your CFA. So your statement of schedule of expenditure of federal awards. So that is obviously a key piece to your financial packet. And then on page 18, it talks about our other report with government auditing standards, which I will talk about. So the gist of that whole letter, that's 4 pages long, is that you have an unmodified opinion, which is the highest level of assurance that we can give you, and that's what you're looking for every year. We are going to skip to page 104 because all of this other stuff is really summarized in what Margaret just went over, and it's statistical information and things like that. So on page 104, this is the auditor's report on internal control over financial reporting and compliance. And this is in accordance with government auditing standards. So as part of your audit, we do look at internal controls. We don't deny your internal controls. We do look at them because that's how we plan and perform our audit. And that helps us to determine our risk assessment. So you can see at the bottom of page 104 that this year we do have an item that we identified as a significant deficiency. But we'll talk about that in a minute as well. So a material weakness is the highest level of finding that the issue, and that's really, if we hadn't fixed this, something could and very well may be materially misstated. A significant deficiency is less in severity, but still something that we feel is very important and should be brought to the attention of management and the oversight. If we skip ahead to page 106, I do want to show you on your sheet that you can see this year, your federal expenditures were 9.5 million, and your state was 26 million. So there's a substantial amount of state and federal dollars that are coming through here, mostly for the airport. Page 108. This is our independent audited report on compliance for each major federal program. So this is the uniform guidance report. So in our opinion, the authority complied in all material respects to the compliance requirements. that could have a direct material effect on each of your major federal programs. We had no findings related to any of your federal programs, which is fantastic. If you skip ahead to page 111, this is your report on compliance for the New York State Department of Transportation Financial Assistance Program. So again, in our opinion, the authority complied in all material respects with the types of compliance requirements that are applicable to the State Transportation Assistance Program for the year ended December 31st, 2024. Again, no findings in this area. Page 114. So this is the schedule of findings and question costs, which you'll see at the bottom of this page. We do outline the significant deficiency. And this relates to the missing board approval over the contracts. So this was an area that we look at every year regardless. We did add some additional steps this year at the request essentially of the audit committee and through discussions that we had, about concerns and how we could approach that from an audit perspective. So essentially what was happening, and I believe that everybody here is aware, is that not all of the contracts that were being approved by the CEO were being brought to the board as informative as they were supposed to be under your procurement policies. So we just noted that here because that is pretty substantial, and we wanted to make sure that that was addressed in our report because we did come across that in some of our testing. And if we go to page 116, this is the independent auditor's report on compliance with the passenger facility card program. And again, in our opinion, the authority complied in all material respects with its compliance requirements for the passenger facility charge program. And no findings in that area. Any questions on any of our reports? Right. And I don't know if you have a copy of this. I'll just talk about it. So we do have a communication letter that comes to the board. It's a pretty standard boilerplate letter. Probably seen it for as many years as you've been involved in the board. So it goes through what our responsibility is, which again is to form and express an opinion about whether the financial statements that have been prepared by management are presented fairly in all material respects with accounting principles generally accepted in the United States. We have to plan and perform our audit to obtain reasonable rather than assurance. We look at internal controls. We don't opine on them, but we do look at them. And when there are suggestions for improvement, we discuss those with management. And if we feel that it rises to a level that needs to come to the board. Significant risks identified. I tend to talk about this paragraph because people read it and they kind of have the, oh my goodness, reaction. So professional auditing standards require that we identify and assess risks. That's how we design and perform our audit procedures. Because we identify a risk does not mean that there's something wrong, does not mean that you did anything wrong, does not mean that we found it. It's just how we formulate it. So for the authority, the most significant risks are management override of controls and improper revenue recognition. Those two are presumptively mandatory. So under our standards, we have to have a really good reason why we would say that those are not significant risks. So I would say at 99.9% of my clients, those are both listed as significant risks. We also have the valuation of capital assets and the GASB 68 pension calculation and the OPEB calculation. And those are really just because of the size of those calculations and the estimates and the judgment that really goes into those calculations. You've got some estimates in your financial statements, as all financial statements have. The most substantial estimates for your financial statements are related to the pension plan, OPEB, and capital assets. So those are all pretty substantial areas. We did have one journal entry that needed to be made that was fairly substantial. So we do put that into this letter. It's noted as a corrected misstatement. So there was an accounts receivable that was understated and a revenue that was understated for $3.1 million.
It was the terminal grant expansion. When I did the New York State receivable, I accidentally included something
Yep. So
Which is not uncommon.
not uncommon,
So
not
now you're
uncommon
dealing
at
with
all.
this thing out here.
I mean, given what, like my experience, I've, you know, worked on so many things, that's not, so that's some
Yeah.
journal entries. So.
Yeah, not at all uncommon. And honestly, if that's the only thing that we have to report on everything that we look at, and that was the only, entry that needed to be made that was substantial, I think you're doing okay.
It's not a efficiency in internal control.
Right.
It's not the only thing we look at, obviously, so it wasn't a pervasive problem, so. It stays as that. It's not-
Right. That's all.
It's the term.
Because it was $3 million, we had to report it.
Only because of the event, right?
Basically, if it had been $3,000, you wouldn't even know.
So I'm gonna go over the remaining reports. I don't know the order in your book, which one is next.
The next one is the airline rates, charges, and settlement revenue sharing transportation.
So here, our procedures here in what's called the agreed upon procedures engagement. So basically, the compliance requirement is that any unspent CFC funds are identified and reported as restricted. Our conclusion is, yep, they're identified and reported as restricted. So that one's easy. Which one's next?
The annual investment report.
Okay, so this report is required by public authority law. And we have to evaluate your policies, make sure you follow your policies and procedures and properly account for investments and investment income. Our conclusion is, yep, you complied with laws and regulations. You haven't updated your policy in a few years, not that we're required to, but if it's updated, we evaluate that. No issues there.
Next one is cash management and investment policy.
Yep. That's all part of the same.
That's also.
Yeah, yep. Yep. So there's no pagination, but I'll just point out you had almost 3.2 million in investment income, and as Margaret mentioned, that's a full year of higher rates being realized. And there's a page in here that allocates or shows where the investment income is allocated. And your investments are just banked, bank interest, savings, that sort of thing. You don't have any. In years past, you've had the slugs and some other investments, but it's actually very simple, very low risk.
Right.
And then the last one's got to be the OPEB trust.
For the performance management.
Yeah, the performance management report is another report required by the public authorities. Law, it just states just restates our mission statement, our goals and objectives that have been previously passed by the board. The last page, just, statistics.
It's already approved.
The last one should be the audit of the OPEB trust.
Yep, that's the.
So public authorities are the only type of entity set up a trust and set aside money to fund their retiree health insurance benefits. So the airport has taken advantage of this. So we do audit the trust financial statements. Our opinion, just like that of the financials of the airport, are that financial statements. Page 6 of this report, you can see the assets and the net position. So it already has 3.4 million of investments set aside for trust. What's the liability? 6 billion. Yeah, so you're halfway funded.
Sure. Well,
Because it's,
this is the net is 6 million
right.
liability.
Yeah,
It's
not
9. Yeah.
liability is 9. Yeah. Yep. And so that's really the report. Financial statements.
For the committee members, we always invest in this every year. So it's like.
Yeah, I think it was a little over 400.
400,000. I'm gonna start bumping it up a little bit. Just,
Yeah.
Fund it a little
And I
bit
think
down.
the airlines have.
I think that was the stuff that we had last year. We were going to start investing a little bit more too. It's always good.
The airlines are okay with that being part of the expense to share, so why not?
Yeah, they just share in the amount that, again, like I said earlier, they just share the amount that is gathered.
Correct.
Yes.
All the actuary.
Right.
Oh, yeah, exactly.
The actuary stuff that doesn't make any sense.
Yeah, effectively cash basis.
Then the only other thing that I wanted to just point out was that, I guess in discussions, there had been a concern about the line of credit. We did look at that. We looked at when those draws occurred in comparison to when they were submitted and then when they were paid back. There were some delays, but those were not on the part of management. It was delays on the grantor side. So everything that we looked at there.
I just want to jump back to the airline rates and charge. That was the second item in your book. That is, viewed by our financial consultants, Frasca and Associates.
Right.
So there's a letter on the second page giving their opinion that this report is, the calculation is correct and they agree with or to come up to the final airline rates and charges. So that is a requirement of the airline use and lease agreement that we have them review this. And give their opinion on it.
Make sure my garage door works, right?
Hey, I'm too busy taking care of this read.
I don't know what it meant.
Just to say too, that I took on this year. The GASB 7, which is the leasing standards that were applied on the prior years. Got through,
They cut down the financial statements by 14
pages, like,
consolidate.
She survived. To tell.
Okay. Any question on any of the items discussed? Is there? I know it's pretty vanilla.
Yeah.
As they say.
Unfortunately.
Mark is doing a good job.
Yes. Oh, yeah. Great job.
We knew that.
You want your audit reports to be. When they start having rainbow sprinkles, things are not going well.
Being rainbow sprinkles.
I do rainbow sprinkles.
Outside of this, what reviews. I have to do other ones. Sorry. All right. So there's several items. So everybody's good. So I'm gonna move that we approve. I'm gonna do it all in one shot. So we can consider. I'm gonna move to approve the comprehensive annual financial report for the year end 2024 with draft auditor's report. With a favorable recommendation. So include that with favorable recommendation to the full board, as well as the airline rates, charges, settlement, and revenue sharing calculation report for the year ending December 31st, 2024 with draft consultant report, the annual review and approval of the cash management and investment policy in accordance with the public authorities law, the annual investment report, which includes a copy of the cash management investment policy and explanation of the policy in the draft audit report, as well as the performance management measurement report of 2024 and the financial statements for the post-employment benefit trust.
So we'll put this on the agenda for Monday.
It's already on the agenda for
The
Monday.
full board.
So we're just making a recommendation for approval of that. Jen, you want a second?
second.
All right, all in favor?
Aye.
All approved. Any other business? No? Okay. Move to adjourn. Thanks, Dave. We're good. I like to have quick meetings.